The luxury watch market has seen unprecedented highs in recent years. Over the last year, prices have pretty much stabilized, and some people are calling it a collapse because they stabilized at a much lower number during the COVID highs, right? Collapse is a bit strong. I would say a correction is what took place the last 2 years. Before I get into the why, I will tell you that there was that few months before, quote unquote, the COVID craze started, the market stopped dead. Nobody knew what to expect when COVID hit. First off, people couldn't travel or go out. That resulted in excess income, and people turned to buying watches. Rolexes, Pateks, APs, Richard Milles, they were all flying off the shelves, with many of these pieces instantly appreciating in value. With the production slowing down at the same time, watch collectors and investors alike focused to the gray market to get their hands on these rare, hard-to-find models. This led to, drumroll please, price hikes. Some as much as double, triple, even quadruple, and I've seen some watches trading at 5 to 10x even, believe it or not. From the start of Q1 2021 to, let's say, March 2022, the overall market index increased 39%. Take that with a grain of salt because, those indexes were combined by only using a few particular resources, if you will, right? It wasn't just about owning a luxury watch anymore. With financial markets going haywire during the pandemic, many people saw these watches as an investment. 20 years I've been preaching the same thing. Watches are not an investment, they are an expensive toy. That entire theory of mine went down the toilet, or so everybody kept telling him, but I told them, wait, it takes time. With less supply coming out from authorized dealers, gray market sellers who already had stock could charge premium prices. It makes us sound to be the evil folks in this equation. No, the wholesale price grew just the same as the retail price, and the gap in between was still anywhere from 10 to 20% max, depending on the watch. And with Rolex, it was usually a lot less. I actually prefer the normal market or the down market because the hotter the market, the less margins we actually made. COVID-19 obviously pushed people to shop online, right? The gray market's strong online presence let us thrive while physical stores were mostly shut down. Of course, more buyers meant more competition and prices just kept climbing. There's a humongous network of B2B that goes on in the gray market. There's a certain percentage of dealers that are out there selling to each other. And with the prices climbing up almost daily, what ended up happening is you could have 6 dealers trade a watch among themselves, all making a profit, while it still did not make it onto a retail client's list, right? So it's a combination of things. It wasn't just the market conditions, if you will. You also had clients that, quote unquote, became dealers. They had certain relationships in certain places where they were still able to get merchandise, and what would they do? Rather than putting it on their wrist, they would sell it to guys like us at a profit because the market was already set. And we in turn would sell it at a higher margin. The Daytona Steel White Dial, at its peak, it got up to like 55 grand. Nautilus 5711, at its peak, it got up to almost $200,000. Audemars Piguet, the 15202, went up to as far as $125,000. And only 2 years later, these prices are long gone.